Welcome back. Hope you're having a good morning. For starters, the Gift Nifty suggesting we open up more or less flattish. But remember, today's expiry day, so volatility is likely to pick up as the day progresses. But plenty of stocks to discuss. Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Thanks so much for joining in. Dipan, I wanted to ask you about MCX. The problem for them was they were not able to migrate to the new technology. Now, the stock has run up a goodish bit in anticipation that they'll finally be moving, and it's officially come out as well. How do you approach the stock at around this 1900 odd level?
Yeah, good morning, Nigel, and thank you for having me on your show. First, a disclosure that we have investments in MCX. And I think amongst the entire exchange space, MCX perhaps has the best dynamics in terms of risk return. The more important story in MCX is the growth of options trading. And earlier, I think options was eating into the value of the futures trading, but now I think futures volume has stabilized and option trading is really giving in the alpha for MCX. And exchange businesses are high operating leverage. So whatever revenues they get from options trading, that goes more or less to the bottom line. And this particular development of them shifting to the TCS platform is huge for MCX because it will save a considerable amount of technology cost for the company. And I think the profits over the next 2-3 quarters can jump many-fold because of these developments. So very positive on MCX. And I think the price rise which we have seen seems to be fully justified.
Okay, Dipan, hi, good morning. My colleague was just putting out a couple of these brokerage notes, right, that have come in this morning. And the one that stood out for me was Motilal Oswal initiating coverage on healthcare global. And what stands out is the target price. I mean, they have a target price of 840 rupees a share, while the stock is currently at, what, 300, 350, right? Do you see such a big upside? I mean, there is, of course, all of this talk of CVC exiting their stake, etc. But overall, how are you looking at the business?
Yeah, good morning, Sonia. See, I think the Healthcare Global is one company which has not played to its true potential. Basically, it has all these oncology clinics across the country, and it was in an investment phase, and the new oncology centers have not yet really started contributing to the profit. But amongst all the healthcare companies, oncology space is one which is growing really rapidly because of greater awareness and the treatments which are available. And they had an issue with debt, but that got resolved with CVC pumping in the money. So the potential is there, the scalability is there. It's just that they haven't delivered in terms of profitability. And maybe, over the next 2-3 years or so, once the operations stabilize and they start getting out of the investment phase into the actual profitable phase, then you may see the profits go up significantly. So I would say that at present, I think it appears to be slightly on the expensive side, but it's a company really worth watching. And the minute you feel that the quarterly numbers are going to start to improve significantly, that's time to make an entry to the stock.
Just want to put out a few names if you can follow me and put these intradays up. Look at the stocks of REC, PFC. These are the big winners from yesterday, right? It jumped and did very, very well. So a bit of a halt between 1 week halt and then the move. I'm not sure if this started again or restarted, but very strong gains. Look at Ujjivan. That was another one. REC, PFC, and then Ujjivan will come up on your screen. Manappuram did very well yesterday. I mean, that's another one. A name like Senco, which is the jeweler from East India, that has started to participate in this week has been fantastic for Senco. Borosil Renewables, MapMy India, Atul Auto went up about 6% or so. It was a buzzing screen in the broader markets. Mid-cap index, remember, ended about 0.75% higher, and the small-cap index was up a full 1% or so. Dipan, good morning. Any thoughts on Senco and the move it has been seeing?
Good morning, Prashant. I saw the entire list of stocks and I said, except for Senco, I can talk on any of the stocks.
And I had to ask you.
I mean, let's talk about PFC, REC, Ujjivan, all fantastic stocks, low price to earnings multiple. Ujjivan has all the NPA issues behind them. PFC, REC. Finally, I think we are seeing growth in their loan book and really attractively valued. In a way, quite safe stock because they lend to the government agencies and the main borrowing also is through bonds, which is pretty much stable. And Atul Auto, I think it's more about an electrification story. As soon as the new product launches start to get going, you may see the revenue flow coming in significantly. So more or less, I think I can cover all your stock except Senco Gold.
Okay. just toss this question to Dipan because he tracks this stock closely. Dipan, 10% volume growth is what they're talking about. But if you map the stock, right, it's done nothing this year in a market that has been great for mid-caps. Why do you think that is?
See, I think that, companies go through these phases where there is soft volume growth. But from whatever I heard and whatever I know, I think it seems to be entering a new growth phase. First of all, I think these new paint companies which are coming up like JSW, Grasim, and Astral, they are growing their capacity significantly, and that's a huge market for Moltech. Secondly, I think the foray into pharma, especially when they say that the EBITDA margins are going to go up because of increased sales to that sector, is quite good and inspires a lot of confidence from that point of view. Valuations, I think, are slightly on the higher side for a packaging company which is in the B2B business. So maybe at corrections, this could be a good company. But one thing I'll tell you, that this company has got some amount of pricing power, because in the past, when even raw material prices went up, their margins were not squeezed as much. So there's something I think about them being a key supplier, because of which I think they can sustain their operations. So generally positive on the company. Just want to try and see if there's an entry point which is at a more reasonable valuation.
But Dipan Mehta is still with us. Dipan, I wanted your thoughts on what's happening with L&T, because the view is in the run-up to the general elections there will be a pickup in capex spending, and private capex as well. And L&T has been one of the big gainers this year. Do you think we are in that 2003 to 2007 phase where a lot of these infrastructure and capex related stocks came back in a multi-year upcycle, or is this time different?
Sonia, first of all, a disclosure that you own shares of L&T, and you're absolutely right. It feels like the 2004, 2007. If you go back to that period, L&T was the top performer in the Nifty at that point of time, and I think this time around also it'll be in the top quartile in terms of performance. And the most interesting part about L&T is not just the domestic orders, but the way they are pursuing orders in the Middle East, I think, and those orders are with a higher degree of margin, and I would say greater visibility of earnings, because the delays are not there when it comes to global orders. That's what my assessment is. And domestic, of course, I think there are certain projects in India which only L&T can execute. So they're in a sweet spot. Management have been focusing on return on equity, and the balance sheet quality is significantly better than when you go back to 2004, 2007, and a lot of value in subsidiaries as well. So L&T is like a must-own stock in your portfolio if you're benchmarking against the Nifty and Sensex.
Okay, well, Dipan, thanks for that. We'll come back to you.